The fact that every central bank is stacking so fiercely shows us that they're gearing up for this reset coming up in October. Bank of International Settlements, BIS. So it's, is it a CBDC? Kind of, but everything's digital. But it's, again, 40% backed by gold. Is a pretty hefty. If we did a system that was similar, 40% backed by gold, that's the Jim Rickards formula. He sets gold at $27,000 an ounce if we back him to money supply, 40% gold. If you do it all, he has the number north of $53,000.
In an era of economic uncertainty, central banks worldwide increasingly turn to a time-tested haven, gold. This trend, highlighted by experts like Jon Forrest Little, founder and director of content at Silver Academy, suggests a potential shift in the global financial landscape. Central banks' demand for gold reached 183 tons in the second quarter of 2024, a 6% increase from the previous year. This purchase surge is not isolated, but part of a broader pattern of diversification among national financial institutions. Countries like Turkey, India, and Poland are reducing their reliance on traditional, more volatile assets, such as currencies, in favor of the stability of gold. Geopolitical tensions, including conflicts in the Middle East and Ukraine, have further fueled this gold rush. As nations seek to protect their wealth amidst global instability, the allure of gold as a safe haven asset has only grown stronger. China's gold accumulation strategy has drawn particular attention. Chen Long, founder and lead economist at Planum, points to discrepancies between China's official gold holdings and market activities. China's official reports indicate modest increases in gold reserves, but significant discrepancies exist. Over the past 2 years, around 2,700 tons of gold remain unaccounted for in China's market. Speculation about the true extent of China's gold reserves has arisen due to this gap. Long's analysis suggests that if China's central bank holds all this missing gold, it could double the nation's stated gold reserves to around 5,000 tons, potentially altering the global distribution of gold reserves and influencing international financial dynamics. This trend of central banks accumulating gold, particularly the opaque strategies employed by nations like China, aligns with Little's argument that we may be approaching a significant economic reset. As central banks bolster their gold reserves worldwide, they appear to prepare for potential shifts in the global reserve currency system. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
First, say philosophically that gold, we started the broadcast showing the various regimes throughout since the year 500. Every time one dips and another emerges, gold and silver step up to do the accounting for misallocations, evil wars, misjudgments in or let's just say from revolution to revolution, there's always some sort of misallocation or theft or corruptness or greed. So if I were to stick with that pattern in history, then I'm going to go with just taking debt and dividing the debt from whatever the real count of gold is above ground. So people just need to do their own research of what debt's around 35 trillion and divide that by how many ounces of gold there are. And then you're pretty much going to get a gold target price. It's phenomenal. And I think once gold was deemed a tier one asset, people knew it innately, because I think people understand that when you say intrinsic value, you mean this gold and its physical properties, its ductility, its malleability, the fact that you can take an ounce of gold and pound on it, and it can be 300 square feet foil, which we call gold leaf, that's been used recently to even coat satellites, and under laser attack, it gets stronger. It's the only material ever under laser attack that gets stronger, not disintegrates. So it just has so much utility, as does silver, because of its physical properties. So people understand that, and that it's been money since, well, some people say 3,000 years, but at least I can document since the first coins were minted. They're rushing to safe havens, but it's just, that's one side of it. The other side of it is they're using it as a hedge against being sanctioned. And the fact that every central bank is stacking so fiercely shows us that they're gearing up for this reset coming up in October. We don't know what the value will be, but there are people that are throwing out numbers And we can figure out, there are formulas. They're even being tossed around by Jim Rickards and Lynette Zhang and Judy Shelton. And I'll be happy to share those numbers with you too and how they arrive at their calculations. But yeah, it's really a big shift. And like you said earlier in the segment, no one knows. Let's say Mount Vesuvius is supposed to erupt every 300 years. Well, the people in Pompeii didn't think it would be them.
Right.
I think that's sort of what you meant by the recency bias. I like the way you said that. Well, yeah, I think the reports came out of Switzerland. They bought but it's a very common thing for China doesn't, I believe if you were to look up right now on the internet based on the World Gold Council, China's holdings, they're like at 2,000 tons. Okay, U.S. is at allegedly 8,000 tons. And then guys like Alistair McLeod say that China has north of 25,000 tons. So no one's going to say how much gold they own. I would never tell my neighbors how much gold I have.
Jon Forrest Little's analysis extends beyond gold accumulation, delving into recent developments in global trade that signal a potential shift in the international financial order. Of particular note is the emergence of a new unit system for international transactions that bypasses the U.S. dollar, exemplified by a recent oil purchase by the United Arab Emirates. This move away from dollar-denominated transactions aligns with the broader de-dollarization efforts championed by the BRICS bloc. As the 2024 annual BRICS summit approaches, geopolitical analysts anticipate a significant announcement from the group, potentially unveiling their blockchain-based payment system. The BRICS nations have been at the forefront of challenging the U.S. dollar's dominance in international trade and finance over the past year. Their commitment to reducing global reliance on the dollar has catalyzed a shift in the composition of global currency reserves. According to the Atlantic Council, since 2002, coinciding with the first full year of BRICS operations, the proportion of global reserves held in U.S. dollars has dropped by 14%. Let's get back to the interview.
One distinction, however, with China and let's say India is they actually tell their people to stack gold and silver. They do it. Because any regime that's been stung in the past understands that during the tough times, gold steps up. So that's big distinction in the West. You just won't, if you were to just go to a Target or a mall and talk to 100 randos, none of them would say they don't know anything about because there's been a media blackout here in the US. Now, getting back to your question of what to look for with this, the unit. The way I'm going based on how it's being advertised, because until then, I can go with nothing else. But we know they tested a transaction 2 or 3 business days ago with a purchase outside the US dollar, a UAE transaction buying oil through this minimal viable product, which is the unit system, the unified new international trade. They're calling IMBREDGE. It's set up through, if you download the white paper, it's set up through the Bank of International Settlements, the BIS. So it's, is it a CBDC? Kind of, but everything's digital. But it's, again, 40% backed by gold is a pretty hefty. If we did a system that was similar, 40% backed by gold, that's the Jim Rickards formula. He sets gold at $27,000 an ounce if we back him to money supply, 40% gold. If you do it all, he has the number north of $53,000. So the full money supply backed by what we say is our 8,000 tons of gold equals 263 million ounces, troy ounces. You just do the simple division and you're at $53,000 an ounce. And in most of the press releases you talk about, it's China that takes possession of the final product. And we know that because a story just broke maybe a week ago where Russia is sending their gold, because you got to remember, they're the second leading producer of gold, and using couriers to Hong Kong, who then offload the gold in Hong Kong banks. And think of Hong Kong's proximity to China. So there you've gotten around the US dollar, and gold's being used as, you can almost paint a spy novel on how it's sort of, do you call it an illicit trade because it's outside the US dollar? Well, that's sort of how we've been taught to think here in the United States. They just see it as a transaction.
As nations like China accumulate significant gold reserves, potentially far beyond what is officially reported, the stage seems set for a significant transformation in the global reserve currency system. With the upcoming BRICS summit and ongoing developments, the world may be on the cusp of an economic reset that could redefine international finance. What are your thoughts on how the growing gold reserves and de-dollarization efforts might influence the future of global financial systems? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.